You make great money, you know you need to invest in property, but you're working 50 hours a week and spending your weekends scrolling real estate apps until your eyes bleed, only to buy absolutely nothing. You're losing hundreds of thousands of dollars in opportunity cost simply because you are too busy. Today, I'm going to show you exactly how to completely outsource the heavy lifting and build a multi-million-dollar property portfolio without sacrificing a single weekend. Welcome back to the Property Now podcast. I'm your host, Matt Alal. The biggest lie high-income professionals tell themselves is, I'll figure out property investing when things slow down at work. Newsflash, you are never going to have more time. And while you're waiting for life to magically slow down, the market is moving up without you. In this episode, we are breaking down exactly how we take time-poor Australians, pull them out of the 100-hour research grind, and secure high-performing and high-income yielding cash flow assets for them on autopilot. So point number one is the DIY penalty. People think that they're saving money by not hiring a professional to find their property. Let's do the math. If your time at your job or business is worth $150 an hour, and you spend 200 hours researching, driving to inspections, and poorly negotiating a property, you just spent $30,000 of your own time. And worse, you probably still bought a dud because you aren't a full-time expert. Wealthy people don't do their own plumbing, and they don't do their own investment properties. They buy speed, and they buy expertise. Point number two, the paralysis tax. You have 50 tabs open on your browser right now. You're looking at suburb yields, vacancy rates, council zoning, and infrastructure reports. It's overwhelming. So what do? You do nothing. You wait 6 months. And in those 6 months, the property you were looking at just went up $40,000 in value. Congratulations, your research phase just cost you an entire deposit. If you add that with the $30,000 in hours that it took you, that's a lot of money. What we do is eliminate the noise. We bring you the exact asset, the exact math, and say, here is the deal, yes or no. We turn a 100-hour headache into a 30-minute executive decision, maybe a little bit more than 30 minutes. Point number three is the unfair advantage, the hidden market. If you're looking at properties on the major real estate websites on a Saturday morning, you are fighting over the leftovers. The absolute best deals, the ones with the strongest yields and the highest growth potential, often never hit the public domain. They get sold off market to agencies like ours because our selling agents and our buying agents know we have qualified buyers ready to pull the trigger immediately. We work with builders, developers, and put together products that you will never see publicly advertised. If you're trying to do this yourself in between your work meetings, you are bringing a knife to a gunfight. So the DIY penalty, I want to tap into that a little bit more for you. It's a really important one that I see quite a lot. You know, we charge anywhere from $3,500 up to $15,000 to work with us. And that might seem like a lot of money at first. However, if you do bring in those elements that I mentioned earlier, the time that you spend looking for property, the time that you spend learning about property, the time that you spend trying to understand which market is going to perform better over the next 5-year period than the next market, which area is going to do what we need it to do to be able to expand into the next property. So $3,500 might seem like a lot of money at first, but what it's actually doing is it's buying you time. It's buying you expertise. It's buying you access to knowledge that sorry, but most of you will just simply not have access to. I see it all the time. People say, oh, look, we want to go and do this and we're going to invest in this. And I said, well, did you know about this? Did you know about that? Are you aware of the costs before and after tax and the cash flow results and et cetera, et cetera? And they said, no, we've got no idea how to do that. I said, okay, cool. Let me run it for you. And here you go. Here's an example of how it's going to look. Oh, shit, they say. They freak out because they know that they can't afford to hold the costs of something along those lines. But simply put, they didn't understand the numbers in the first place. What would have happened is that they would have bought the property, rented it out, at the end of the financial year, given their information to their accountant would have claimed the tax returns, probably leaving out really important things and things that will get them to do so that they don't miss out on that. They might have missed out on doing a tax variation so that they can claim that return faster out of each paycheck and then pay down their family home a lot faster, maybe 10 years faster than what they would have if they had done it themselves. Let me ask you a question. How much is your mortgage now? $3,000, $4,000, $5,000 a month? If we can pay that off 10 years faster by using perfect strategies to do that from acquiring more assets, what does that mean to you? $4,000 a month saved over a 10-year period is about $500,000. Think about how much interest you're not paying to the bank by doing that. So it's powerful. And when you set things up correctly, it also means you've got more capability, or most likely will mean you've got more capability to expand into more assets faster. If you take your path and it doesn't go the way that you think it was going to go, which is probably going to be the case, it might take you another 5 to 10 years to get into another investment property. If you work with an expert, it might only be 2 years until you get into an investment property. And that compounds. Now, I've mentioned about thinking in terms of generations and decades and as opposed to years. Build wealth for your kids' kids, your grandkids' kids, so on and so forth. Because it's going to get harder to buy property. You look at it now, people under the age of 35 aren't buying property like they were 25, 30 years ago. The numbers have changed dramatically because we've got so much more competition now. 100 years ago, we had 12 taxpayers to every retiree. We now have 2.5. And what this means is that the government can't afford to support us like they used to. We have so much migration, international migration coming into the country, that there's a lot more competition now. There's a lot more people trying to buy houses. And if you're a first home buyer and you've only got a $10,000 deposit and you're coming up against someone from overseas who's coming here with $200,000, $300,000 in the bank, you're often going to lose. We don't have enough supply to keep up with the amount of demand that we need to house all of the people coming into the country. So what does that lead to? Price rise. If you look at the government solutions that they're coming up with to try and bring housing prices down to a more accessible mark for people, it's bullshit. They're going to punish the investor. Capital gains discounts being removed. Negative gearing tax being restricted to 2 properties. What is that going to do? It's going to limit the supply even more because not as many houses are going to be built. So government, use your head. Go and get stuffed. This is why the private sector has to do so much to keep things going, because the government just doesn't deliver. I'm going down a bit of a rabbit hole here, but it all adds up. And when you're doing all of this on your own and you're doing it yourself and you're listening to the government and these people that advise you just have no idea what they're talking about, or they have an agenda attached to what they're talking about, there's a good chance that you're not going to get to where you want to be. So don't do it yourself. Unless you've really worked out a formula or a blueprint that works. You're learning from people that have paid to work with other people. I really do advise that you work with someone reputable, someone that's got a good history of reviews, someone that's got a good public image, someone that's authentic, someone that will say to you, hey, I don't think that you should buy this from us because I think that you can get a better product from someone else. That's an authentic operator. That's a professional. That's an expert, someone who's in it for the long term. There's so many property people that come into this space that are in it for a year and they paint themselves as being the experts. Like, you've been in the industry for a year. I started in the industry in 2007, so that's nearly 20 years of experience of making mistakes, of doing things that have worked really well, have not worked really well. Unfortunately, that's how you learn. So I'd love to work with you. Come and work with our team. I only allow authentic operators who know what they're doing or are willing to be trained in a way that will teach them to do what they need to do. We will get you to places that I don't think most people can get to a lot faster. So that's point number 1. I hope that makes sense. The second one is the paralysis tax. So paralysis tax is essentially the outcomes that you're missing out on because you're not willing to make a decision in a timely manner. The amount of people that I speak to that say to me, Matt, we're just going to hold off for now. We just don't quite think it's the right time. We love everything that you've presented to us. We think that it makes a lot of sense. However, I was speaking to my uncle at a barbecue on the weekend, And he said that investing in property right now is not a good time. I call bullshit. Like the time to invest in property is yesterday. That's always the best time to invest in property. You're never going to time the market. I mean, sometimes you will, and we can still do things to time the market, but it's a big market. It's time in the market that's most important. It's time in the market. It's the longer you're in it, the more you're going to benefit. We know that. Look at Perth. Perth was stagnant for 10 years. It hardly did anything. It didn't go down in value, so it wasn't the end of the world, but it stayed stagnant for 10 years. And then within 3 years, it's doubled. It's had a generational boom. It's a 14-year cycle as opposed to a 7 or 8 year cycle on the eastern seaboard. But it doubled in 3 years. 25%, 30%, 20% returns annually for the last 3 or 4 years. It's been nuts. A lot of people have made a lot of money because they've been in the market and they've had time in the market. So when you get talked out of making a decision to buy something because a friend who you hardly ever know or an uncle that hasn't got a property or has got one property says, no, don't invest right now. It's not the right time. And you're probably making a mistake. Paralysis tax is one of the biggest blockers of success that I see with clients all the time. Because if you miss out on a 10, 15, 20% capital growth year, that means that you're going to need more deposit for your next one. It means you're going to get a lower yield most of the time, which costs you cash flow. It means you're probably going to pay a lot more interest to the bank. You've missed out on that opportunity. But when you've got that opportunity, you can then leverage that into more opportunities. I keep saying the same thing. I'm a broken record, I know. But it's not rocket science. It's proven. It's a formula that works. So are we always going to get it right? Not necessarily. But as long as we can manage the cash flow, that's why we guarantee a 6% yield with 0 vacancy on our investment properties. If we can manage the cash flow, the debt will never send you broke, ever. You need debt to build wealth. That's how everyone builds wealth, is with debt, with other people's money, with other people's debt, with the bank's money, whatever. But if you can't control the cash flow, if you can't manage the cash flow, if you lose your job, you can't work for 3 months, and you can't afford the overheads to keep your investment, that's the biggest problem. That's what will send you broke. If you're spending way too much as opposed to what you're earning, that is what sends you broke. You know, if you're borrowing too much for liabilities, car loans, credit cards, personal loans, you're going on holidays, everyone loves a holiday. But it's income producing assets that are what is going to make you rich. They are the things that are going to make you wealthy. And look, the word rich means something to everybody. You know, it's something different to every person. And I'm a big advocate for that. But you need to make money to be able to live the lifestyle you want to live. And if you're then helping other people by providing housing to them, tenants, then you're doing a good thing. You know, the Australian housing market's worth over $11 trillion now. It's the biggest asset class by nearly 3 compared to superannuation at number 2. You know, we need housing, and we've got a lot of people moving here and not enough houses being built. I got stuck into the government earlier. You know, they promised 1.2 million homes over the next 5 years or whatever it was a couple of years ago. We're miles off it. They're not going to deliver the amount of houses that we need to keep up with their promises, because they never do. So it's the private market. We need to build new homes. We need to get more houses out there with better designs and better products that generate returns for investors, that generate better opportunities for tenants. And that's why we have the multi-live range. That's why we do what we do in the way that we do it, because it solves many different problems. And then point number 3 is the unfair advantage, the hidden market. If you're seeing a house on realestate.com, don't be confused. You're paying $20,000, $25,000, $30,000 for agent fees, even though you're not paying them yourself. It's in the house price. You're paying for the marketing of that property. You're competing against the retail market. You've got competition with other consumers. This is standard. If a property is publicly advertised, it's going to auction. You know, auction outcomes. I took a client to an auction who wants an established property recently, and I managed to talk them into setting a budget at the very top of the range. It was 680 to 730 is what the price was being advertised at. I actually got them to agree to a max price of 750, so 20,000 above the price guide of that property. It went to auction. It sold for $835,000. It was $105,000 above the top range of the asking price, on the listing, which is just crazy in my opinion. The advantage to purchasing something off market is that, for example, we're doing all of the negotiating for you. We're putting it together with someone, with a provider of land, with a builder, with a developer, where we go and buy 25 properties off them. We go and buy 30 properties off them. It's rate of return via volume acquisitions. So we're able to provide you with products that you're just not able to go and get on the standard market. It's the same with developers that provide products to their close networks before they release it to the public. There's always a launch price, and it's usually a lot sharper than what's being released to the public later on down the track. It happens all the time with apartment complexes as well. I'm not a big fan of buying apartments, but you get what I'm trying to say. So yeah, I mean, if you're interested in building as well, if we're building 10 homes a month or 20 homes a month with a provider, and something goes wrong for your build, I can assure you that we're much more likely to solve the problem for you than what you would be able to do if you just built one house with it. Because I don't care what anyone says, builders are just like anyone, that they want to do the right thing, and a lot of them will do the right thing. However, if you're one client to them, as opposed to someone who, provides 100 sales to them per year, there's always going to be a weight of difference. They're always going to support the company that provides 100 sales per year as opposed to the one. They will bend over backwards for that provider because they know how valuable that provider is to them. You're still valuable as a single consumer. But if I'm doing 100 sales a year or 200 sales a year with a company, and something goes wrong, and I pick up the phone to the owner of that building company and say, hey mate, we need to get this fixed. This is a problem. I'm pretty confident that they're going to say, yeah, I agree with you. Let's get that resolved. So there's all sorts of advantages to being able to access these off-market opportunities, paying to work with experts and professionals, like I mentioned earlier in the episode. It all compounds. And then if we think long-term, that leverage opportunity that comes from those outcomes makes such a big difference to your long-term outcome. So, the unfair advantage is that we work with professionals across the whole industry, across the whole country. We get access to insights that the everyday consumer just doesn't get access to, unfortunately. So that's why we charge for the implementation, because we've built that expertise, we've built that network, we've built our resources to create products that we think are worth paying for. Look, you can keep trading your most valuable asset, your time, to play amateur property investor, or you can stay in your lane, crush your actual career, and let the professionals build your wealth in the background. Stop letting decision fatigue steal your financial future. If you're ready to stop wasting your weekends and start actually building a portfolio, check the show notes to see how we can do the heavy lifting for you. Hit subscribe, share this with a mate who has 50 real estate tabs open right now, and I'll see you on the next episode of the Property Now podcast.